Hey, this is Jay. Got a market update video for you. So I know I like to focus kind of on Cosmos and crypto, but I'm doing more, expanding more to just general market because crypto's been just in downward movement, and I am pretty pessimistic, honestly, for the near short term. And also, we've got a lot of stuff coming up with like the election, and see how market prices are relate to that. So let's look at this. So we're going to take more of a view at the S&P. And so we can always do kind of our market structure and price, and these this wedge I drew months ago, back in this time when it was here in April, and we went higher, came down, we had that mini crash in beginning of August, and then we've rallied back up near the all-time highs, and I'm right here. And not financial advice, but I'm looking for this to roll over right now because, one, we have hidden bearish divergence which happens when the RSI here is lower than what we had at this other price, and then also which just signals I'll run decreasing momentum. So that is in the S&P, which I think this looks pretty clear cut to me. Then also you see the Nasdaq, hasn't quite rallied as much, but still it's rolling over. And also you can see this also in the VIX, which the VIX is measured by your contracts for calls and shorts, and just how much the difference in prices are. And so for a long time, it just signals volatility. So like in markets, certainty provides usually positive flow where people can predict what's going to happen. And so the past few years, like you see in COVID was our last big spike, and there was a bunch of uncertainty, and everything's been drilled back down, but we've broken above this, and especially back here in August, and from here it looks like it's rallying to me. And because we have a lot of uncertainty, we got war in Ukraine, you got the election, we got what the Fed's going to do with rates, and how that's going to impact everything. And so a lot of volatility, a lot of uncertainty shows up in markets. So we got that. And then also we can see with bonds too. So bonds, TLT, I like to use for measuring treasuries. And so I know everyone's talking about how when rates come down, there's all this cash that's been collected in like high yield rates that will come flowing into the market. But also, I think people realize is that when yields come down, the price of those assets, the treasuries, go up. So if we look here, let's come back to more of a long term. This is the TLT again, and a weekly, and I'm going to put it over it with the Fed funds rate. So we see right here, Fed funds rate's high, yields are low. Prices are low. If you look here, this is during COVID. Yields are low, prices of bonds are high. Same thing here. If we go back to like that mini 118, and whenever they come down, so like right here, they come down even before COVID happened, the prices of treasuries go up. Same thing here. We can go all the way back to 08. Yields are high, they come down, they spike up. It might take a little bit, but eventually spike and they settle back in. So with that, you can take that too with the S&P, where you got the high yields or low yields come up, and it's usually not till the yields come down that we start the rally. So they're high, and they eventually, like we have more, they might come up a little bit more, but then eventually they come down. It's not till they bottom out. Same thing here. We got to go back even further to 08. High, it might take a little bit, but they don't bottom. Not time to buy until it's at the bottom of the yields. Same thing here. .com, you got high, and then not until they bottom out that we start to rally and look for a big momentum. This one, I know we've had quite the rally, but it's also at the high, so they're about to cut. Why move out of treasuries when the treasury values are going to come up? So that's my point. So everyone's talking about rally, or people are at rally or down. But so that's my opinion. Not financial advice, but my opinion. So let's look at more of a short-term thing. So we see like all these stocks where majority of the S&P and NASDAQ are in these high-tech stocks. So Apple, to me, same thing. It looks like it's rolling over. Tesla, maybe not rolling over as much. Netflix is definitely rolling over. Same thing. Amazon, down quite a bit. Nvidia is coming down pretty hard. The only one that really isn't is Walmart. And Walmart, like I said, benefits a lot from with high inflation because people seek higher prices or lower prices and everything. So maybe that's why. But also you could say the same thing too with currency devaluations. But that's a whole other video for another time. But just general statement of what's going to happen. We know the Fed's going to cut rates. And why move into the S&P at all-time highs when we know that the TLT is going to rebound? So hey, thanks for checking this out. Been trying to do more stuff with trying to get back into the swing of doing videos. You got here the DeFi Journey channel, but I'm also going to post stuff on my personal account. Just need to post on my personal account and Twitter. So please give me a follow, drop a like, let me know what you liked or didn't like about the video and other stuff I can do. So thanks. See you in the next one.